Hello friends, in the last trading session we saw that bears managed about 2% downtick for bank nifty in a percentage terms, whereas in a points terms it was nearly 800 points. Now if we check overall structure or data, then we can see that a bears managed about 1000 points downtick from the day's high towards the day's low. Towards the close, about 200 points bounce was seen, which is comparatively really very good by the bulls. Reason being, they managed to give a close near to the psychological value of 38,000. Now, if you people remember, couple of days back in our old video, we had tried to discuss that on a daily chart, if we apply Bollinger Band, what looks like a breakout should not be considered as a breakout. The reason being, though bulls managed to give a close outside Bollinger Band, this is not at all a breakout, because for Bollinger Band breakout condition, moves should be in a tight range, whereas we had seen a volatile moves. Now if we see overall structure, then still comparatively bank nifty is stronger with respect to the nifty. Further, if you people remember, we had tried to discuss with respect to RSI that there is some divergence which may lead to some downside tick as well. Now in the last trading session, RSI and RSI crossover has taken a place, so we can expect that negative side momentum may continue, but the problem is Bollinger Band is comparatively shrinked. Now if we see overall structure, then somehow overall momentum is bullish if we ignore all indicators and just see price action. As per this, if we see, then a rising channel momentum is in place, and accordingly we are going to touch support as per this structure. Let us try to draw and see where we can have a support. Now here if we see that a support is nearby, near to 37,500 or around values. So still support is about 500 points far from the last close, and it is about 300 points down from the yesterday's trading session low. Overall, if we see that somehow structure is getting into a small range, so after that again we may see some breakout or a breakdown as a whole. Now if we apply a short term moving averages, then negative crossover has taken a place, but somehow this gives a less conviction, reason only being we get a close near to 38,000. Now if we compare overall structure, then we can see that somehow last three candles, red candles, are in the favor of bears without a shadow of a doubt. But if we apply super trend, then again support is near to 37,500 to 37,300 near about levels. So somehow this may act as a support going forward. Now let us try to check out the structure on a hourly chart. On an hourly chart, if we see overall structure without a shadow of a doubt is in the downtick, but somehow, we repeat, somehow we can see that again support is nearby on a smaller time frame. Support is at near to the last close or last trading session low only. So in the simple words, if at all bears manage to give a good momentum on the downside below 37,800, our lower side support, that is 37,500 to 37,300, may get tested soon. Now let us try to check out what RSI says over here. RSI on an hourly time frame is in oversold zone, and comparatively we may see some bounce soon. Now if we see support as per our demand supply, or you can say that double bottom, triple bottom or previous swing lows, then we can say that a support is at 37,667 near about, and below that we again have a support at 37,560 near abouts. So overall we can say that a support is nearby and we may see some bounce back, but that bounce back may be a different kind of a mean reversion as a whole, and we may see probably again downtick may continue. These all are just a criterias, or probably you can say that an expectations based on the yesterday's big downtick. Now if we see on a 15 minutes time frame, then again we can see that this downside and RSI is getting matched, and a good bounce was also seen in a RSI leading into, or you can say that an attempt to come out of the oversold region. Now this oversold region should be considered just as a temporary bounce, and concrete upside move should be required for a further good bounce back. Now if we apply super trend, then super trend again resistance is nearby. If we talk about the levels, then levels are near to 38,150 near about levels, which is just 150 points, which is not a very big value for a bank nifty. So we may ignore super trend as a whole over here. Now here if we check, negative crossover is yet to take place for a bank nifty on a 15 minutes time frame on a long term moving averages, that is 100 and 200. Just to have an understanding, we are trying to make an attempt to check out on a 5 minutes time frame. Then 5 minutes time frame downside has already been almost completed. The reason being negative crossover has already taken place and mean reversion may take place. 38,000 is the key level. Reason being it is a psychological level. Bulls manage 200 points bounce from this level, so this may lead into some bounce depending upon the overall structure and bank nifty components. Now if we see option chain data, then max pain is at 38,300. So this also suggests that there can be some bounce. Reason being simple, that a bounce from lower levels of about 200 points and a highest OI at a 38,000 do hints that there can be some bounce seen. At that point of a time, if one is able to find out the resistance in a proper way, they can go short as well. But this all depends that what is the structure and overall OI data at that point of a time. Now if we see 38,000 put option, then it is having a OI of nearly 78,000 contracts, which may act as a resistance. Which may act as a support. But at present, as we have closed near to 38,000, we need to ignore this structure as a whole, and we need to check highest two OIs in the next side. Then it comes to 37,000 and 37,500, but practically OI at that level is not that strong, so our eyes should be glued on 37,800 levels or a previous trading session low as a whole. Now if we see on a call side, then very strong resistance can be seen at 39,000, 40,000 and 41,000. Practically it makes no sense to go for these far strikes. Rather we should keep our eyes focused on 39,000 call option, wherein OI is about 125,000 contracts, which will definitely act as a resistance. Now if we see max pain data, max pain is at 38,300, so one should keep an eye once spot or cash levels reaches near to this level. and as per their chart setup, as per their chart study, they can act accordingly. Now if we consider PCR data, then PCR as per OI is really at a oversold zone, and practically we are going to ignore it as it is not going to give us any true fair picture. Now if we consider as per the volume, then volume based data reflects that bears are bears are expecting more downside in comparison to the upside, but the problem is they failed to manage the momentum on a downside below 38,000. If they are able to do it below 38,000 and manage to keep it for a longer term period, then we can see a downtick as well. But as discussed, first of all, 38,300 should be our key focus, and from therein we can act or we can trade accordingly. Friends, please manage the risk, because days are gone for naked or simple option writing or option trading. One has to be focused on their proper risk management, proper understanding of OI, and trade on a proper directional view. VIX at present, India VIX is at near to 20 levels, which says that overall range will be a broader one. And both side moves we are already witnessing in last couple of trading sessions. So one has to manage a risk, one has to safeguard their capital and trade accordingly. In fact, if you see, we had discussed in the last trading session during live market hours that good writing was seen on a PE front, but PE writers should be bit alert for Nifty, and accordingly from that a small bounce was also seen after we had given our post or our view near to 12 p.m. on our Telegram channel as well as front page. But after that again a downtick continued. So writing is not also again easy in the current market. We hope this video is going to help you to understand the market momentum and take the trades accordingly as per your understanding and risk profile. See you soon with another video. Till then, stay safe, take care, bye bye.